Should we start thinking about the stock market a little bit differently after what we've just seen over the last 6 days? In today's video, we talk about what's going on exactly in this level here and why this line might be showing us a little bit of a sign of what's to come. Nvidia earnings push the market straight into the call resistance after hours. And of course, then commodities around the world start to fall off big time, led by gold and copper. But what also might be very interesting is to take a look at charts such as this to give ourselves a little bit better edge in markets. So join us as we go through stocks, commodities, and cryptos for the day. Well, welcome back everyone to The Daily Show. My name's Tom, and as always, we're covering the macro, the data, the latest indicators, and everything that you need to know about markets. If you've ever been left scratching your head and not understanding why markets are moving the way that they are, then remember to subscribe and smash that bell icon as we bring simplicity to the complicated around the world. So we'll start with the big WTF moment of the day that we always like to put in the show. And this one here is Goldman Solomon saying that he sees 0 rate cuts this year. Going from around 6 to 7 rate cuts to 0, it's amazing how fast this becomes. And remember, rate cuts are not done out of the goodness of a central bank's heart. It's because they broke something and we just don't know about it yet. So of course, it will be a very interesting point when we do eventually see the first rate cut. By the way, put it in the comments down below when you think it's going to happen. Will it be just a few months away or is it going to be years? Let us know. So Nvidia is the talk of the town, and rightfully so. Some amazing earnings results. And you can see here, these are the major takeaways from the call after hours, which is pretty much the most important thing for Nvidia. And you can see it's a record $22.6 billion in data center revenue, up 427% year on year, driven by the Hopper GPU demand. So building AI factories starting to increase, gaming revenue was up a little bit more, which is pretty impressive. And of course, generative AI driving an architectural shift, transforming every single industry. And they said the next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the $1 trillion installed base of traditional data centers to accelerated computing and build a new type of data center. AI factories to produce a new commodity, artificial intelligence. Now, I'm a big believer that AI is the future of tech. It's going to drive the next 10 to 15, maybe even 25 years of innovation, and think about it as the Internet 2.0. But just like the internet, while companies like Nvidia and these fledgling starts are going to be building the infrastructure, it's likely over the next couple of years, you're going to see new AI companies form that are going to have wild valuations on it, and then we'll see a lot of IPOs. Do remember that tends to stretch markets. And one of the things about that is we'll probably have a bit of a crash led by, no doubt, an AI bubble. Some of you think the AI bubble is already here. I tend to be a believer that it's going to go for a little bit longer first, and then it will become a problem. And then, of course, you'll want to be buying it hand over fist if it does end up dropping off. And right now you could say that's easy, but when it comes time, believe me, people will say, oh, it was just a generative technology where you were making a couple of pictures and a chat bot and those types of things. I think it's much, much more than that, and I'm sure most of you agree. Sentiment indicators are stretched according to Goldman Sachs, showing us that we are at a point where we need to be thinking about a shift in markets are possible or is possible. We've had a massive not massive pullback, but 5 to 6% pullback in markets during the last couple of months. And then, of course, we saw this huge rally up. And I posted over on our X account, links in the description down below, that all of the recent days of activity, 1, 2, 3, 4, 5, and 6 were all net sell volume. Now, this is one of the new tools in TradingView, and I think it's pretty cool because what's showing you here is the delta every single one of these days was actually net negative. So is this a big player starting to sell into us? Well, as we go through in the charts a little bit later on, it certainly could be. But let's talk about where the opportunities are if you're a market bull and if you're looking at the longer term picture right now. Is it in the large caps, or are we actually seeing the mid caps starting to become even better value after this earnings season? Well, according to Yardeni research here, you can see that mid caps are still priced pretty well and smaller caps are priced very well. 14.7 on the forward PE and 15.7 in comparison to 20.6. Now, this means there's a bit of runway here to get back to the lofty heights we were in 2021 and 2020. So, of course, forward PEs could certainly get back up there. And you're thinking, maybe around 4 extra PE could be put on to mid caps and small caps over the next 12 to maybe 24 months, which is very interesting. It also brings us to this great chart here from Durian Trimmer on X. And basically it's the Russell 2000 versus the overall forward PEs. And you can see here that when we're talking about ratios, 15.3, we've been 16.6 before. And notice what happened is the market's actually at almost the same high, but can you see the PE ratios actually dropped off? And that's showing us that we do have growth here on the potential. Now, Stanley Druckenmiller, one of my favorite investors and traders, what has he done? Well, he's basically said to us that we are possibly looking at the wrong market because he's been kind of trimming his NVIDIA, and you might say that's wrong, but I can understand why he's doing it, going into a few other AI stocks and buying the Russell 2000. And we are nowhere near the lofty heights of 21.7, which we've been at before. So are we stretched to a standard deviation? The answer is no. Are we getting actually cheaper as price sits around here? The answer is quite simply yes, we are. And of course, that really fits in with some of the things that we've been discussing right now, which has been, are we running a 1994 or 1966 style bull market run? And in both cases, there's usually a little bit more to come. So in the soft landing analog here, you can see it's got a bit more to come. If we are following 1966, again, more bullishness to come. Interestingly, as we saw this recovery, which actually started in 2022, there's usually a bit of a pullback around this point. And of course, in election years, we usually see May kind of be a soft month where it goes sideways a little bit, and then it goes ballistic in June, July, all of those types of things. As we mentioned, financial conditions are not tight right now. In fact, they're loosening. According to the Fed, has no idea. According to their FOMC meeting minutes, that was pretty clear. And it is expected that we are on trajectory to make at least 61 new highs this year, currently sitting at 24. So there's still a decent amount of run up potentially in these markets. And we'll be doing a real deep dive because what we're starting to see now is flows going into other markets. And it's an exciting time because we just saw over the last 24 hours, as we're about to look at, a very, very big move in one of the most hated sectors of the market. Now, speaking of most hated, well, copper was once most hated, but it has become most loved, and it is a heavily traded commodity at this time. Long copper has become the most crowded trade, with net speculative long positioning increasing significantly in recent weeks. Now, I've been warning now for about 3 to 5 days that copper most likely has seen a temporary top. I'm still bullish on it, but we saw that overly extended kind of line come through. And as you'll see when we look at copper in more detail, it seems to be there. Let's now move over to a few other markets and we'll talk about rotation. Of course, the last 24 hours in particular, solar has been number one, clean energy number two, semiconductors doing well thanks to NVIDIA, and they'll do probably even better over the next 24 hours. But more importantly, take a look down the bottom here. Some of the leaders you do want to see, regional banks and home builders. Now, I expect home builders to be a very, very clear sign that things are starting to go bad, down 6.76% over the last 5 days of trade. Over the last 24 hours, it was all about solar. Massive news coming in for solar about tariffs and everything helping the American market. And this sleeper hit came out big time, 8.97% move. When we look on the bottom end, it was all of the inflationary-based trades that didn't have a great 24 hours. So let's take a look at the S&P 500 with a little bit more detail. As we mentioned, we have a negative delta that comes up here on the S&P 500 over the last 1, 2, 3, 4, 5, and 6 days. Now, this is not to say that you just sell, because of course that's not how it is. But what it is showing you is that somebody is probably starting to clear up some of their positions. And actually, even with the candles being green, somebody is selling it across the board. Now, with that coupled with the decline line here, the advanced decline line also decreasing, shows you that while NVIDIA and other markets are leading, there are some inherent little bits of weakness starting to come into the markets. And this becomes very important because you need to keep an open mind. So right now, what have we got? We've got a positive gamma situation with a melting up market that held the one-day expected move that we had in the last 24 hours and held the support or the demand zone. So that means that the bulls are in control. And you can see here in after hours trade, it's going quite strong. This kind of suggests that we could be pushing into the 5,400 narrative, which we've discussed this week. And I wouldn't be against this market at this stage. I don't think it's worth it, and we've talked about that several times. But what happens if the market does manage to break below the 5288, 5280 space? Well, that becomes very, very different because, of course, at this point, we could be looking, let's say the market does this, we could be looking at this as a UTAD and overall distribution, giving us that kind of nice needed pullback after what has been a very beautiful V-shaped reversal. So let's say we do see something like this. There's a great chance we're going straight into 5180, 5200 put support zone. And this could be the next kind of big launching pad for a lot of day traders, swing traders, etc. Let's see if the options agrees with this though. Well, of course, positive gamma situation at the moment, guys. And what that tells us is that as we push through, let's say 53.30 here, we can see the next day being the Friday, 53.50 becomes the key resistance. And there's a decent chance that we could push into 5400, which is the June OPEX level, over the next coming sessions. Again, if the market is rallying up, I would not fight with that position. But notice the puts that started to come in over the last 24 hours. Probably ahead of NVIDIA, some people were hedging. Of course, the result does look good on the surface here. And we can see that 52.60 and 52.50 have a lot of puts sitting on them. And actually, there's a chance of flipping to the negative gamma situation should the markets go underneath that important 52.80 zone. So really, I think for the bears, you want to be closely looking at 52.80. We want to recap what happens over the next day in particular, especially if this market that's rallying right now gets crushed back down. And if that turns into another negative kind of overall sell, then that's probably telling us that we've got the early signs of a small wyckoff and we could be looking at sell-off. Now, CTAs, commodity trade advisors, they agree with that statement. They are not bullish. Look at this. They're down a little bit here. They're neutral. I would say they're neutral, so it's not necessarily a massive sell. But clearly, there's a little bit of difference in the air than what we've been seeing. And I think sector rotation remains the best part of the markets right now to understand which are hot and which are not. Brent doesn't look too hot right now, does it? So big breakdown. We've been really discussing oil a lot on the channel recently. And I'm not sure I like what I just saw over the last 24 hours. We've put in a warning for a few days now that I do think that what we initially thought was a great bull zone instantly became bad, straight on that level. As I said, if you entered the right zone, then you could exit the right zone. That's the beauty of getting perfect positioning. But Brent itself does start to look weak, and we'll look at that very, very soon. From the NVIDIA perspective, we expected 1,000 to be hit. We know 1,000 to 1,035 is where all of these calls are. And if NVIDIA chooses to blitz these over the next 24 hours, it could easily push 1,050, even 1,100 narrative because it is in positive gamma situation. So very strong there from NVIDIA across the board realistically. GameStop, we kind of think that this thing is sitting around, of course, that $20 target, $20 being a difference between a huge amount of puts that are sitting underneath or a decent amount, and of course, all of these overall calls. $20 is the major support. It's also the HVL level, so basically where things move from positive to negative gamma. And if markets actually do end up pushing the narrative of strength, then we will probably see another bounce up from GME. I wouldn't write it off just yet, but this is that level that we've been discussing for days now, and it keeps holding. It needs to hold for bulls to be in control. Tesla, maybe a little bit disappointing for some people over the last 24 hours, but you can see why. 24th expiration options, 185, huge amounts of calls, huge amounts of puts sitting at 180, so stuck within those two zones. We get another closure above 185. I think we're pushing that 200 narrative actually at this point. So watch the Tesla positioning. Very important. It's stuck really between positive and negative gamma right now. Big close the day before shows that thrust is there. So for now, the price action I still think is okay. Let's move over to the rest of the market now. We'll blitz through some of these. The VIX bounces off the 1186. Of course, we always expected that. VIX separation. So there it is. But yeah, a little bit of a bounce into NVIDIA earnings. And then, of course, it came off. Options market for bonds, that's not showing any signs of freaking out yet. Home builders looking pretty negative on the charts, down 2.69% here. You can see, doesn't look good. Home builders doesn't mean you go and sell the market, but it certainly shows you the overall strength of the market underneath in terms of construction, and that is starting to weaken there, which is interesting. The American consumer, we use discretionary versus staples to figure that out, weakening now since December. Not a great sign for a lot of the consumer discretionary stocks, so certainly an area that I would stay away from for now. Lulu getting hit back down over the last 24 hours. And of course, yields remain between 4.7 and 5 with no real changes there. Now we move over to copper. So we've been kind of talking about this a lot, and all of us have been kind of concerned about the overall massive move. Now, when you start getting these huge flaky wicks and everything that's going on, plus, of course, my stop sign kind of things, I always expected it to have a bit of a problem here. Now, I think it could consolidate or even move a little bit down. So with copper, I'm waiting to see more. I am bullish on it over the medium long term, but you'll notice that this 20 moving average will be very important. Of course, with such big movements up here at a 5 level, there are going to be some take profit targets. What else is happening though? The US dollar hits the zone. So bears are going to be looking incredibly closely at this. I think a lot of people lost positioning here. We talked about the importance of seeing the lower low. We didn't see it. So of course the markets went up and took that position. And this is now the 20 moving average, which is pretty respected, you would have to say, from a bear and bull position. Very important level here for the US dollar over the next 24 hours. And I'm specifically looking at it around 105.10 as well. So I think it could go even a little bit higher and then maybe start to sell off. So US dollar strength straight after the FOMC meeting minutes. But yeah, something we are very much looking at. What about gold? It pulled back, anchored VWAP, 20 moving average, pretty much where we expect maybe a bull to come in. No reaction yet. So small time frame day traders will be looking for bull positions in here. As we said, we thought that silver, gold, copper, all of these metals were a little bit overly, let's say, exhausted. And I'm not surprised to see them pulling back. I do think that gold could even come down a little bit further, maybe even into the 23.20 range. But this is my first level for day trading to have a look at the smaller time frame. So certainly worthwhile checking that out with your systems. Let's move over to silver. Again, weakening, but not as much as gold. Silver is stronger than gold at the moment because it's trying to play catch up to gold's price. Remember, silver is heavily suppressed over the last decade. I still think it's going to $50, but it's going to take some time. So I think silver is going to go down to around $29.50 minimum at this point. So yeah, I certainly think it's got a little bit more to fall, and I think that means that gold might suffer as well. Now let's move over to one of the elephants in the room, which is of course oil. And I left on here Great Bull Zone just so I could kind of run it down. So we kind of called that as a Great Bull Zone here. We thought the market would weaken into this zone and then find strength, and it did. Found strength, failed at the 20 moving average. Our final hurdle to scale into the position to go long into 83.50 a barrel. So what happened then? Well, it came back down. And when it came back down here, warning signs. I did not like that price action. And I mentioned that on the show, and I continue to reiterate that. It's very bad. Now, what I would expect is at least at minimum, it'll take a low. Now, if it takes a low and rallies, then that's probably a Wyckoff bottom. If it fails here, which it starts to look like it will, then where does that bring us to? I think it's going down to 72.50-ish a barrel. So realistically, this could be a flag. Few people have brought that up on the channel. I agree with you. It certainly could be. I am neutral completely on this pair, if not negative on it now. And you might say, well, how do you change so quickly? Well, this is not an investment position. Of course, it is a patience, react, don't predict trade position. They are different things. So by having patience, you can recognize sometimes, and having great entries, you can recognize when you might need to cut it through. And as I mentioned over the last 24 hours, last couple of days actually, I was getting very, very skeptical of why we keep coming down to this price. And that usually means that we're getting a low steal, et cetera, et cetera. So it's a good learning curve and something that I think, it's been good to go through together. And hopefully you appreciate that. And if you like that type of thing, when we revisit trades, then you can check that out. Well, let us know in the comments down below. Tesla 180, so really strong movement, 186 in the previous session, pulls back inside candle. To be determined how it ends up playing out. Loved the action last week at 170. Obviously loved the push through here to 185. Next target would be 190, 200. And for now, Tesla needs those good news stories to come through. As we already looked at with the options, there could be still more to come from Tesla. So we'll break that down the next 24 hours. What about solar though? Wow. Huge move. Straight into the resistance targets. I think this is an overall massive Wyckoff base. And of course, the government is starting to work in the favor of solar as well now. So, some powerful stuff here led by FSLR, which you can look at on a chart. A lot of people loving this one. Enphase, First Solar, all of these types of things doing really, really well. But you can see here that it's actually a much stronger stock than the general solar market. So nice basing, really nice consolidation recently. And then, of course, absolutely ballistic move. So would I jump on that bandwagon? Probably I wouldn't jump on it anymore, but there will be other ones that could benefit from all of this news. So yeah, people might want to jump in on that. That's up to you. I think that the ship has sailed, at least initially, on that one, and you could get access to the solar through other ways. Another one that we want to discuss is, of course, Hood. So we saw a strong closure on Hood on the weekend, and now we see this nasty looking candle. Now, Hood's had quite a few traps in it recently. We, of course, had this rejection wick that never got flow through. So yeah, no bearish sign on that. Then we get this strong close. Then we go to a new high and then we reject. weekly close will be very important from this. Some people will argue that you've got an evening star candle formation here, which is correct, and gap up, gap down. Technically, it's a negative sign for the markets, but I could see it doing something like this. So I wouldn't say it's time to panic on hood or anything. The weekly still holds true. Let's see how that one plays out. Nvidia, 1,000 after hours. Everyone will be saying, well, should we be buying it? What should we be doing? I don't think it's an easy trade. As I've said many, many times, AI, Nvidia is the best company in the world right now. I, of course, also think Google has some benefits. We've talked about that several times on the channel here, and it's been doing very, very nicely. But there is always another opportunity. So with Nvidia, you had an opportunity to get it cheaper recently. We mentioned over here, we thought we would see this sideways action for 3 months. And we have so far, and it just made a new high. And what really will happen here is more about the response. So I think it's a good result. I think most people will agree with that. It could go into a massive rally and keep going. I don't think it's an easy trade here. And of course, if you did bet on the bullish side, you went to exactly where you would expect, which was 1,000. So we'll keep looking at the options world here, but I always like to buy pullbacks. And in this case, it's more of a momentum. So has it broken to a new high? Absolutely. Nvidia, though, has that kind of false breakout, tendency. Go back and look at history. You'll see what I mean. Aussie 200 sitting on support, so an interesting level for it. Not much to mention. RSP, equal weight US market. So we mentioned there's a stop sign here kind of showing us that maybe we're a little bit overbought for now. A little bit of weakness here in comparison to the markets going up. And that's showing you that the whole broad market has slowed down in recent trade days. It's been more consistency of just a couple of stocks that are pulling this market up at this stage. US 2K is similar, finding some okay support, and NASDAQ is the one leading at the moment. Thanks to Nvidia and everything to do with the Mag 7, we're seeing that blitz across the board. So even though I've got stop sign and a star here kind of telling me that we're a little bit exhausted, it can take some time to play out, and I would not fight the animal spirits of the markets right now. We have our S&P 500 levels. We know what we're looking for, but the trend remains firmly intact bullish, guys. So do not fight that, even if you see divergences. Some other things, Bitcoin pulled back from the key resistance. Of course, I'm looking for it a little bit lower. I'd like to see it around 68K now before maybe resuming the bull trend. Also, you could look at it at 66, which would be the daily 20 to resume the bull trend. I am bullish on Bitcoin, and we do need to do a special on it. Ethereum being pretty much the monster recently, though, with that huge rally thanks to the exchange traded fund. As always, make sure to practice risk management, guys. There are lots of opportunities in the markets right now. Some amazing stuff coming in on solar. I'm sure a lot of people will now be looking at that sector. And if you've been watching the channel for the last couple of weeks, you'd know that we've been discussing solar in quite a lot of detail. So remember to subscribe, smash that bell icon if you enjoyed what you saw today. And of course, follow us on the socials as well, and the links in the description down below. Thanks so much. You have a great session. We'll see you tomorrow for another update. Bye for now.